This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say, at PennyMac, greatness lives here.
Welcome to The Interest. I'm Christine Stewart. We all know that consumers have been getting cold feet in this market, and companies are doing everything they can to get them a loan. We saw a meme the other day that said, marry the house and date the rate. These days, we are seeing a lot of creative ways to help borrowers who may think they still need 20% down to buy a house. In the spirit of making housing more affordable to underserved communities, HomePoint, the country's third largest wholesale mortgage lender, says it will reduce the price of its conforming conventional loans by 75 basis points for potential homebuyers. Company officials say the offer also is intended to raise consumer awareness about the benefits of working with independent mortgage brokers. The bonus pricing will be available to homebuyers in specific zip codes in 20 states. Borrowers in those areas will be eligible for the pricing bonus at no additional cost to them by using mortgage brokers who are approved by HomePoint partners. Interested homebuyers in those states should contact a local independent mortgage broker to determine how or if this applies to them. There's a growing awareness that education is part of getting people into their first home. But how do you reach those communities? Our own Katie Jensen spoke with Tony Thompson about how best to do that.
Oftentimes what we've seen is in first generation home ownership, where you have families that are buying for the first time, there's really a dependency on the mortgage broker.
Working with first-time homebuyers can take some extra care, especially when the borrower is the first one in their family to take out a mortgage.
As a mortgage professional, our goal and job should be to certainly help provide borrowers with as many options as possible, and then use that expertise that we have as that trusted advisor to position them to make the right and best decision.
Tony Thompson, founder and CEO of NAMBA, says working with any first-time buyer takes patience. Millennials may have different questions and concerns than other borrowers, but there are some things, Thompson says, that tend to work in all situations.
Focusing on how to educate those borrowers about the opportunities in home ownership to build and establish trust first.
What is the best way to do that? How can you gain trust from these borrowers?
First and foremost, the new paradigm is not sell, 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 close, close, close. At least when you're talking about the millennial and the multicultural market, it really is educate, 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 and then close.
Thompson sat down for an episode of The Principal, our daily podcast at Originator Connect. He says originators don't have to pander to different groups of buyers. Simply show that you will teach them and look out for their interests.
If you can first establish yourself as a trusted advisor, most consumers, irrespective of your color.
But what happens when you're trying to work with customers who aren't fluent in English?
And I don't know a lot of Spanish, right? And so what I do is help loan officers and brokers understand that if you can't connect and engage to the market, you actually can look for people on your team that are people who you can bring to be a part of your team that can help you communicate, engage, and build trust.
Sometimes educating borrowers and building trust means letting them know they're not ready yet.
One of the things I always like to say, and certainly when I originated, was the phrase that you don't qualify at the moment. However, this is what we need to do in order to help you achieve your goals and your objectives.
When you're able to build trust with a new borrower group, your business can grow rapidly. For the Mortgage News Network, I'm Katie Jensen.
Freddie Mac reported that mortgage rates continue their up and down trend, jumping to their highest point in a month. The average rate for a 30-year fixed-rate mortgage is now 5.55%. That's up 42 points from the prior week. The rate on the 15-year fixed followed a similar path, up slightly to 4.85%. The combination of higher mortgage rates and the slowdown in economic growth is weighing on the housing market. But it's not all bad news. Home affordability improved in 47 states. That's the second consecutive month of improvement. The MBA's Purchase Application Payment Index showed a slight improvement this month. The MBA says affordability conditions improved modestly in most of the country in July, as slightly lower mortgage rates, a decrease in the median loan amount, led to the typical homebuyer's mortgage payment falling $49 from June. The most affordable states where mortgages are taking up a smaller share of a person's income were Washington, D.C., Connecticut, Alaska, Louisiana, and West Virginia. We'll be right back after a word from our sponsors.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, visit themortgagenewsnetwork.com.